through attorney review, through the initial review, through home inspection, your loan's in process. Now what? So let's pause here for a second and let's go through who's in your life right now as a buyer. And let's figure out who we're going to pay and how they're going to get paid, right? So first of all, you've got your real estate agent. Do you pay, as a buyer, do you pay the selling agent? No, you don't, okay? It's really important to know that in Illinois and in every state, the seller pays the selling agent, okay? The seller pays the person that represents you, the buyer. Now, there's a little bit of litigation around that right now. It comes up every, 5 to 10 years, let's say, and it's been challenged, it's been upheld, but this is how it goes. The seller pays your realtor, the buyer, as well as the realtor who listed the property. You have your attorney. In Illinois, we have attorneys. Not every state has an attorney. In Illinois, we do. In the Chicago market, we do. Do you pay your attorney? Yes, you do. You typically pay your attorney between $500 to $700, $750 or so. You do it at the end of the transaction, not at the beginning. And so you don't have to pay them out of pocket early up and up front. You have the lender. Are you going to pay the lender up front? An appraisal is basically anywhere between a 20 to 50 page report on the value of your home in that moment at that time. What does it mean to you? Well, it establishes whether or not the purchase price of your home was largely correct. The impact of an appraisal can be very, very significant. So you will pay up front for an appraisal. You always pay usually anywhere between $350 to $500 typically for a really garden variety property. If it's a bigger property, more expensive property, you may pay as much as $800 for an appraisal. If it's an investment property, same thing. There's a couple other reports that have to be generated on an investment property. It makes those appraisal prices higher because, simply put, the appraiser has more things to do to complete to get the report back to you. So in some cases, the appraisal can be absolutely much ado about nothing. And if you're buying a home, that usually happens when the appraised value, the price that the appraiser comes up with, that's the appraised value, is at the purchase price or higher. If it's at the purchase price, you'll never hear about it. If it's above the purchase price, your lender will probably reach out to you and say, hey, good news, you have more ownership in your home. You bought it here, it appraised for here, so this extra amount of ownership is yours, congratulations. And that's a happy day. If the appraisal comes in below where you bought the price, or if the appraisal comes in below where you thought the appraised value was on a refinance, you may have an issue that needs to get cleared up. If you're buying a home, it needs to be brought up with your real estate representative, as well as the selling agent, as well as the listing agent, the person that's listed the home, and said, hey, we've got a gap. Can we negotiate out this gap? Because we bought this home, we agreed it was worth here, but the appraiser said it's here. You do have avenues to fight an appraisal if you feel like the appraisal was poorly done. If you feel like they made a mistake, you can put together an argument and dispute the appraisal, but be prepared for pushback. You know, when an appraiser files a report that is lower on a purchase price, let's say, they know that they're going to have an impact on a transaction. They know that they're going to have to defend their work. So be prepared for that person to also defend what value they came up with and what comparables that they used, what other comparable properties on closed sales that they used to come up with that value. And then the home insurance, of course. You got homeowners insurance. So either before the transaction has closed, so during the process, or at the closing table, you're going to buy a homeowner's insurance policy for the property. Now, either if you're buying a single family home, then the premium that you're going to pay is going to be a little bit bigger, right? Because there's no, without getting too far into the details on condos, there's no other policy that's going to cover any part of the property. For a single family, it's just you, okay? So your insurance is going to cover that particular property and no other property. It's just you. That's different than a condo. A condo, the insurance is going to be covered that you're going to buy is usually going to be a walls in policy, meaning everything inside, and then the condos association is usually going to have its own master policy. It's what it's called, master policy, that covers everything external to the property. So for that reason, condo insurance is usually much, much cheaper. Sometimes that master policy covers what's inside your property as well. Most of the time it doesn't, but sometimes it does. So if you're buying a single family, you also need to buy an insurance policy. That absolutely qualifies as something that you should factor into when you're considering everything that you're going to bring to the closing table as it relates to buying a property. Okay, in the next video, we're going to go from where we are at the end of the attorney review period, and now what you're going to be doing as a buyer to make sure that your loan closes on time.